Welcome back to Chai with Siddiq, your weekly market wrap for NRIs investing from the Gulf. Oil just had its best week in months, and this time it's not far from home. Days of drone strikes and naval blockades near the Strait of Hormuz, and suddenly crude is the story again. AI stocks got a reality check, and China sent the memo. One Chinese startup, one new model, and the whole semiconductor trade wobbled. The world panicked, India shrugged, while the Wall Street and Tokyo bled red. Dalal Street quietly closed higher again. Grab your chai, let's go. It's been a properly noisy week. Real geopolitics, real tech jitters, and once again, India doing its own thing while everyone else panics. Let's get into the numbers. Quick look at where the week landed, then we will go index by index. S&P 500 slipped a little over 1% this week. Nothing dramatic on its own, but it got dragged down hard on Friday specifically. Oil spiking and tech wobbling both at once. This one hurts to look at. Down close to 3%. This is the AI and chip trade finally taking a breather after months of straight up gains. More on why in a bit. Nifty went the other way, up over 1%, while the rest of the world was selling. Indian markets quietly climbed. We'll talk about why that keeps happening. Same story on the Sensex, up over 1% too. IT and banking stocks did the heavy lifting, and domestic money kept buying through the dip. Rupee basically went nowhere, flat, less than a tenth of a percent either way. Given everything else happening globally, that's actually a quite win. And then there's oil, up nearly 7% in a week. Big move. If you are filling up your tank in Abu Dhabi or Dubai, you have probably already noticed it. We'll get into why. So here's what actually happened. Tensions between the US and Iran escalated hard this week. Strikes and counterstrikes back and forth, with Iran reportedly hitting US linked targets across the Gulf, including near Bahrain, Qatar, and Kuwait. The US also brought back a naval presence around the Strait of Hormuz, the narrow strip of water that something like a fifth of world's oil passes through. Any hint of that route getting disrupted, the oil traders panic instantly. That's what drove crude nearly 7% higher. This is a live, fast moving situation, so treat the specifics here as a Friday snapshot, not gospel by the time you are watching. The other big theme was tech, the AI trade cracking a little. A Chinese lab called Moonshot released a new model that apparently goes toe to toe with the top US models, and that spooked investors who have been pricing US AI companies for perfection. And some hawkish comments from the Fed's new chair, Kevin Warsh. Rate cuts aren't coming soon. Inflation still too high in his words, and chip and the AI linked stocks got sold off hard. Not necessarily the AI story ending, but a reminder that a trade that goes up eventually gets a reality check. So, what does this mean for us in the Gulf? Two things. First, oil. When crude spikes because of tension right on our doorsteps, it's not just a number on a chart. It feeds into fuel cost and eventually how GCC economies feel today. Worth watching, not panicking about. Second, if you're holding US tech or AI heavy funds and the dip rattle you, that's normal after a run this strong. Good moment to check you are not overly concentrated in one theme and that your India allocation is doing its job as it's meant to be. It's had a good few months for that argument. That's the week. Oil back in the headlines, AI stocks catching their breath, and India once again holding its own. As always, this is for educational purposes only. Please do your own research or speak to a qualified advisor before investing. If this helped, hit subscribe and I'll see you next week. Until then, cheers.